You can take out your phones, scan the QR code, enter your name, and enter the competition. As you could see, some of the questions are easy, some others are a bit more complicated, so you gotta be fast, you gotta think fast, and answer fast if you wanna win the prizes. Again, the first 3 people will be winning the prize. And if you asked the previous winners, they probably told you that it's an amazing prize, so you do wanna participate. Let's give everyone 1 more minute to sign up. Once again, thank you to Outlets Plains by Avalabs for sponsoring the summit and offering us this amazing opportunity to test our blockchain knowledge and see if people are actually listening to what speakers are saying on stage. Thank you for the hearts, love it. I think we can maybe get started. I see a few more phones up there. So last few seconds for people to sign up. Yeah?
I think we're good to go.
We are at 30 people again.
Yeah.
We have a few more. Okay. 31. Anyone else? No? 5, 4, 3. Okay, we go. You go.
Okay, let's get ready for this one. Remember, it's not just about getting it right, but answering quickly. Okay, which term best matches Mika's token categories? Digital ID, DeFi token, stablecoin, e-money token, asset reference token, utility token, payment utility governance, fungible, non-fungible, semi-fungible.
This is also something that, if you know Mika, you know the answer to this one. But if you don't, let's see. Oh, 22 people got it right. Well done.
Nice.
7 people were a bit misled, and let's see who's taking the lead. Theo P, Mark, and Maria from Aave. Great, that's a nice podium already. Let's see who can dethrone them from the podium. Next question, please. Question number 2, why does the EU want coordinated blockchain rules? Why is that? To increase competition, to sound fancy, to ensure clarity and reduce regulatory fragmentation, to create many stable coins. Basically all of them, but there is one that actually makes the most sense. Which one is it?
To sound fancy, nah.
We love sounding fancy in Europe.
Everything sounds fancy.
And the answer was to ensure clarity and reduce regulatory fragmentation. 30 people got it right, only 2 people got it wrong. We're doing great, well done. Let's see how the situation changes. Maria, did you get that wrong? You just went down so much. We saw you. So Theo, Mark, and Jax are now in the lead. Let's see, question number 3.
Okay, what makes DAOs different from traditional organizations? They rely on code-based governance and community votes. They don't have any employees, they use NFTs, or they only exist on layer 2s.
There might be a bit of a tricky answer here. Let's see. Okay, that was much easier than I thought. Well done, well done. DAOs rely on code-based governance. Great, Theo is clearly in the lead.
At the top.
Mark and George and Martin are going up there. Jax lost a bit of points there, but still very close. So let's see how the next question is going to shape up our leaderboard. Which of these is a layer 1 blockchain? Uniswap, Arbitrum, IPFS, Avalanche. Oof, you better get this right, guys. Otherwise, you're not winning any prize. Let's see. Which one is a layer 1 blockchain? 32 answers in. Let's see the results. Avalanche, of course. Well done to the 23 people that got it right. The others are eliminated. No, just kidding. You still have an opportunity. Let's see. How's the scoreboard? Ooh, we see some changes. George and Martin up there. Mark is back in the podium. Kelly also going up. Jax, what is happening, Jax? Come on. Next question.
Okay, question number 5. What's the key use case for self-sovereign identity? Preventing rug pulls, giving users control over personal data, lowering gas fees, or making NFTs more mainstream? Should be self-explanatory, I think.
I had to think about it for a moment. No, yeah, I got it. I think I know this one. And
Okay, our audience was amazing. 28 correct. And now the last one, Tommaso.
last question. No, first we see
right, the leaderboard. Oh my God, yeah.
Let's see the situation before. George fell down. Kelly up there, Martin and Yax, and we have Mark and Maria trying to get to the podium. Let's see who's gonna win these 3 amazing prizes. So, last question. What is a zero knowledge proof used for? Verifying info without revealing it, getting a job in fintech without a diploma, encrypting wallet backups, adding an unknown amount of funds to a liquidity pool. I wish it was the second one, but I don't think it is.
Zero knowledge.
Or maybe it is. Zero knowledge. That's a good pun. Good pun. I like it. All right. A few more answers coming in. And the first one was the correct one, verifying info without revealing it. So well done on who got this right. And now to the final results. Let's see who are the 3 winners. At the third spot, Mark. Well done. Hey, well done, Mark. Second spot, Martin. Who's Martin? Martin. Well done, Martin. And number 1, Kelly. Well done, Kelly. Congratulations. Big round of applause to our winners.
Okay, perfect. Thank you, Tommaso.
Thank you so much, Silvia, for doing this with us today. And we're going to do it again tomorrow. So don't miss your 2 chances again. You have 2 more chances
tomorrow
to win
morning.
your prize. Tomorrow in the morning,
and at lunch.
The lunch break. Yeah, the lunch break. So see you tomorrow, Silvia.
Come early.
Thank you.
To get people to come early, no?
Yeah, of course. You need to be early, otherwise you're going to miss your prize. Well done. Thank you,
Thank
Silvia.
you all. And
big round of applause for Silvia, please. Thank you. And now we go back to our main program with a very, very interesting conversation on decentralized infrastructure as the next big leap in finance. And for this conversation, I'm very happy to call on stage our friend from the European Crypto Initiative, Marina Markesic, who's going to moderate the conversation. Together with her, we call back on stage once again Peter Kerstens from DG FISMA, Stani Kulechov, CEO of Aave. Great to have you with us, Stani. And Georg Harer, co-CEO of Bybit Europe. And last but not least, Leonard Franken from the Dutch Financial Authority. Thank you so much. A big round of applause for our panelists, please. Thank you.
Hi, everyone. Thank you for this introduction, Tommaso, and thank you so much for the invitation to moderate this brilliant panel. I'm very excited about it. We're going to talk about decentralized infrastructure, of course, the positive aspects and maybe the challenges, how institutionals are looking into that. And we're also going to have some time for questions, so get ready. So maybe, just to start, I'm going to do a very short introduction, and then I would like to ask you to introduce yourself, and maybe a question on how you just choose to work in crypto. What is a little bit of a short story? I know we have some regulators here, maybe they didn't choose that, but they're still working on this topic. So first we have, of course, Peter Kerstens, no need for introduction, advisor at DG FISMA, very well known to this community. Second one, we do have Leonard Franken. He is working on technology, innovation, and timber at AFM, and also a lecturer at the Delft Blockchain Lab, a University of Amsterdam, if I'm correct? Delft, okay. Stani Kulechov, founder and CEO of Aave. And, of course, Georg Harer, CEO Bybit EU. Congratulations on the new promotion as well.
Thank
you. Maybe we can go from that part. Peter, just a little bit of a story of how you started in crypto.
Well, I kind of chose to work on blockchain and crypto, but it more happened to me in the sense that it was unavoidable. If you take an interest in digitalization and financial services, you have to be pretty blind or stupid not to end up close to crypto. So that's how it happened for me.
I got a more or less similar story. I came from RBS, the Royal Bank of Scotland, as a manager from IT, and then I entered the Dutch Central Bank. And they said, "You're an engineer." I said, "Yeah, I got a PhD in computer science." "Well, we have something like Bitcoin." It was 2013. "Please look into that." And that was my first step into blockchain.
Mine was during actually my university years. So early 20s, I was building a lot of fintech applications, and that was, I think, the time that marketplace economies were growing. You had peer-to-peer lending, crowdfunding, and an interesting way of aggregating financial opportunities globally and access to capital. So I've typically grew up more as a computer programmer, but at that time, regulation was coming in for these marketplace economies, and I chose to actually go and study law instead of computer science back in Helsinki in Finland, where I'm originally from. And at the end of my studies, I kind of was reading a lot about different technologies and spaces between AI and also and I stumbled upon on Reddit and read about Ethereum, and there was kind of like a latest update at that point in 2016, and I was reading about this DAO hack as well, and it just got me very excited at that point, and I started to realize that this is actually an interesting financial operating system, that you can build these fintech applications, but in a fully programmable way. And that's when I also started Aave, our startup, and never looked back.
Thank you. And Georg?
I think I never actually choose to work in crypto. I was into crypto already before I started working, a few months before, back in 2012. And the funny thing is, back in the day, it was something, nerdy, that's never going to be serious. So I was then working for 10 years in the TradFi world as a lawyer. And only in the more recent years, there was the need for understanding the law, but also, especially in the crypto space, in the regulatory space, you also need to understand the technology. And yeah, I think that's when finally I was the right person in the right place.
That's why now you see why I'm so excited about this panel. So today we are going to talk about the technology. We're going to see what has happened until now and where we are at this moment. We're now in December 2025. December is a good month to think about, what has been done, what have we done in the last year. But as an analogy, what has happened from maybe 2016, you mentioned, Stani, at this time, the reason we are all here is decentralized infrastructure. So how it has evolved in the last years in terms of technology, markets, and then of course later we're going to talk about institutions and other looking into that as well. Maybe, I don't know who could start, maybe Stani?
Well, at least from a technological perspective, I think a lot has changed since 2016 and 17 up to this point. I think first of all, programming a lot of these protocols has become more easier. There's a lot of tooling and a lot of different challenges that we were facing a few years ago has been solved or understood better. And I think when it comes to things like the underlying blockchain networks, there's more understanding on the security concepts around these network and the networking itself. So there's a lot of involvement, and also the scaling strategies of how we can actually scale these networks for mainstream down the line. And I think from the application layer and application protocol layer, I think in decentralized finance we've progressed quite significantly from a world where we saw a lot of experimentations in a new way of programming kind of financial protocols into seeing actually protocols being growing, becoming more and more battle tested and kind of a public good and resilient. And I think for me personally, a big moment over the past years has been the kind of the biggest fallouts of, for example, the FTX and similar centralized financial services and exchanges on the crypto side, and seeing kind of DeFi being able to be resilient and keep being battle tested has been quite significant improvement. And at the same time, stablecoins has been evolved. So when I started building on Ethereum, at that point, 16, 17, there wasn't any stablecoins as well. So all that infrastructure and ability to exchange assets in a self-custodial way atomically evolved, and the kind of on-chain liquidity evolved. So I think DeFi looks very different than the early days, but it's still in a very kind of early infant stage.
Anyone wants to comment, Leonard?
Yeah, I like to comment on that one. I think since 2015 we've seen a lot of technological developments. I would almost say that in the earlier conversations there was there is a fragmentation in supervision. But what I say, well, supervision will probably centralize towards 2029, 2030. But if I look at the blockchain space, it's fragmentized. We see more and more blockchains popping up, also in the private sphere, and that's a worry to me, that there is a humongous amount of blockchains that each have their own risk on their own. On the other hand, we also learned a lot. We learned a lot more about decentralization and how complex it is to create a perfect DAO and how easy it is to game them. And I think we're still learning on that aspect, that creating the perfect DAO is still a challenge, to me at least.
I kind of feel there's not going to be ever a perfect DAO.
Let's agree on that one. But having said that, I agree that lots of things are getting battle tested. But we must be aware of the fact that by the fragmentation in the blockchains, we don't introduce new risk by disintermediating the current business, but introducing new intermediaries to link those blockchains, to glue them together. So I think we need some more development on that space.
Yeah, if I may touch on this point also from my background, having those two hats of the technology nerd and the lawyer, I think what is clearly noticeable is that technology has advanced a lot, especially in the first years. I remember back in the day it was Bitcoin, and people were saying Bitcoin is going to replace US dollar. Before we had even stable coins and layer 2 and whatnot. We've developed technology much further, but on the other hand, I see that the legal framework has not developed further. We've seen now in the last years, I think you're all aware of it, a big push towards centralized infrastructure, so especially centralized exchanges with MiCA, centralized stablecoins, centrally issued token. Those are all now, I think, fairly well regulated. But staying with MiCA, any actual Web3 applications are excluded from MiCA. This means it's more or less still unregulated, but this also means that maybe, and for example, this is a very concrete topic that we're having at our company, maybe it's an alternative investment fund, because you can't, not applying MiCA doesn't mean something else doesn't apply. And it goes even further if you go into civil law, because we see that many of those technologies work, but when it comes to making sure that you actually have the right, for example, to own a token, to pledge a token, to get back a token from a custodian, a lot of legal framework is lacking.
Peter, do you have a comment?
Well, the biggest development I've seen since 2017, which is the first time I ever heard about Bitcoin, was somewhere early 2017. Before, I'd never ever heard of it, was that there is a lot less attention now to the actual technology and more to the applications. And that's a good thing, because in the early days, for me, 2017 was early, I would come across a lot of technology people, libertarians, anarchists, hoodie-wearing people, geniuses. Most of them were crazy. Some of them should be in jail. Some of them are now in jail. And while that was interesting, I didn't really understand what they were talking about. And now we see much more mainstreaming of application and people who can maintain a conversation at a level I can engage with them. So when people start going on about the technology and so on, I switch off because I'm too stupid for that. I don't understand any of that. But we see really a mainstreaming and a maturing because, as with many things in life, only the geeks are interested in the actual underlying technology. Real people, the real economy, is just interested in the application. If you're a car fanatic, you want to know how the engine operates and what horsepower it has and so on. If you're a normal human being, not a car fanatic, you just want to drive a car and you want it to be safe. And that's all. And the same is a bit with blockchains. Most people are not interested in how blockchains work. They just want them to work.
Yeah, but I still think this is what you're saying may be true, but the fact that in current boards there is no engineer or technician available, at least with some decent knowledge of the blockchain, that's cumbersome and that's worrisome. And also at governmental level, I think having understanding of the technology is key in this digitalizing world. You cannot do without, because being involved in fighting cybercrime, and also being at the Delft University of Technology, know all too well what can go wrong and all too well how you can manipulate the system. So I think that knowledge, the deep understanding of the technology, is needed. And I looked at the room over here. There are more grey suits than I have in my, and that's something. The geeks are not there anymore. The hoodies are not there anymore. But I think you need them to develop this decentralized finance world, because we're not there yet. You need those geeks.
No, I agree, but we also addressed that both in MiCA with fit and proper tests. So basic people, what does that mean? That you actually have to understand what it is you're doing, what this technology can do, what it can't do. But more importantly, and this is not often not raised often enough during crypto discussions, people always go on about MiCA this and MiCA that. The DORA regulation, digital operational resilience, is far more complicated and far more important here. And that is the place where we say as Commission, and now the EU, because this is now legislation, is that if you are a financial institution, you have to own and understand the technology on which you operate. And this has to be at the highest level of your organization. If you are a banker and you have no control, you have no understanding of the technology that the bank uses, you shouldn't be the CEO of the company. If you don't understand it, you have to surround yourself with people that do understand it, because technology, whether it's traditional technology, decentralized technology, is the driving force of finance. And you need people that understand this. What they wear doesn't really matter. It's what they know and what they can engage. And some of the technologists are great at the technology, but they're not that necessarily good at understanding financial risks or how markets operate. And some people who understand very well how markets operate, or how counterparty risk operates, or what macroprudential risk is, may not understand how the technology works. And you have to sort of bring the two together. And that is what we've been focusing on for the last 5-6 years with MiCA, but also with DORA. And so this is basically a call for attention, is that if you think you figured it all out because you finally read through MiCA, you know that half of it is nonsense. There's another piece of legislation. It's DORA. It's far longer and far more complicated than MiCA.
I can only agree that MiCA actually seemed, I always joke, like the easiest was MiCA, the second most difficult was DORA, and the most difficult thing was getting a bank account.
I would also say, like, I definitely I'm not a big fan of like kind of like defensive regulation, in the sense that if you think about the car example, you know, I kind of think that the innovators of the space also lead with safety. For example, we had cars with seat belts done by car companies that really wanted to invest in safety and knew that they could sell more cars, right? Airbags, and then afterwards that becomes regulation. So I think one of kind of like my biggest hope is that there's enough space to figure out what this technology and the application and use cases can be, and then recognizing the kind of like gaps and issues and what could be the protective measures. And I do think that a lot of the innovators in the space are really there to build for good and can set a good example and good standards.
So we mentioned Dora, we mentioned Mika. I wanted to mention something else for maybe the ones in the room that are not aware of, but I think that most of you are. The Commission has published a research last year, so it's already a year old, but I think it's still interesting and it's very, I would say, aligned with this panel topic. It was a research on decentralized finance and as opportunity in a way traditional financial sense as well. And Professor Fabian Schaar has written, I'm going to quote just a part of it and then of course ask Peter, I would say, for comments on that. But it's saying in a conclusion that similar to the internet, many of the applications built on this foundational infrastructure will likely be centralized and regulated. Yet an open and neutral base layer fosters innovation, competition, and development of the new use cases.
Well, a professor said it, so it must be true. Joking apart, what that study really says is that regulators, policymakers, should stay away from making technology choices. They should allow different technology solutions to develop, and basically sort of said, look, while there's been a long debate that's now coming to a conclusion as to whether in finance the chain should be private and permissioned or public and permissioned or permissionless and so on. Said, look, that really is not for the regulators to say. That really is for the market to determine what chains will appeal. Now, part of the financial industry is in large part to blame for the hesitation regulators have had with permissionless chains. Because it's the financial industry, the traditional finance people themselves, that did not want to go into a permissionless environment. Until they woke up and said, well, if we're going to have it permissioned, what's the point of doing a blockchain to begin with? They realized that if you're going to go the blockchain or the DLT route, at least the base layer has to be open and permissionless. If you need to have permissioning, you can have level 2s and layers and application layers where you can have different permissioning. But if you're going to close the base layer down and make it permissioned, then you're basically denying the fundamental advantage of this technology and of this paradigm. And the initial hesitation in the industry about this has led to the attitude of regulators to be extremely cautious about permissionless chains. Because, and this is important for people who are involved in public affairs and in lobbying and dealing with regulators, is that many of you have demands. You have to think very carefully what you ask for, because very often you get exactly what you ask for, especially if you're influential, if you're powerful. Powerful forces were asking for restrictions, and what they got was restrictions. And then they realized, oh, we don't want these restrictions. So think carefully what you want for. And this study says policymakers, regulators should not regulate technology. They should allow the technology and let industry, let the market choose which models they want to use and own that choice. Take responsibility for the choice. It's not a regulator that has to say, you have to use a permission chain, you have to use a permissionless chain. Companies that build applications on this, regulated companies, choose whatever they want, whatever suits their needs, and therefore they have to understand the technology, because if they don't understand the technology, they can't make an informed choice. But once they make that choice, they have to own that choice and bear the consequences and the liabilities that come with those choices.
Any other comments on where is the line between technology and regulation?
No, I think Peter is right. Regulation should not be about technology, but what have we seen in the past with Mika? We're regulating a technology, more or less. Otherwise, we'd have an expansion on MiFID or something like that. But those choices are being made, and I think for proper and good reasons. And I agree with you that like the internet, the TCP/IP protocol brought a lot of wealth by integrating voice, data, and video. And now we have a chance to integrate financial markets, payment instruments, and the crypto assets and the real world assets on a common platform. But then we should have a common platform. And I see at the moment a lot of diversion in in that technology area. So, but maybe in 10 years' time we say we have a TCP/IP for blockchain, and that would be big time. Yes, great.
Maybe again one insight from having two hats. What I think is very difficult in practice is that we mentioned the tech people who are really into the technology. But on the other hand, especially on the institutional sides, we have the risk managers, the compliance people. And in my view, the way problems are tackled or the way safeguards are set are completely different. Let's deal with a very simple example. In MiCA, we have a lot of basically do's, how you, about transparency, about your organization, and many other things. So it's a lot about trying to define the ideal regulated player. Whereas if we stay with the very simple example of Bitcoin blockchain, the assumption is we assume that everybody wants to cheat and defraud us. Let them try, but we make it mathematically virtually impossible to do so. And I think those are two fundamentally different ways of thinking and tackling problem, but in the end we want to bring those two together because it's the tech people who think of these concepts and develop it, and then the compliance people, the risk people, the DORA people who need to implement it and who will also be held liable for implementing it. And this is very often where I see where it becomes difficult to basically matching those two worlds.
I could add to that, actually. I think that's a really exciting point because a lot of the things that you can do, let's say in decentralized finance, you basically can establish protection by design, and for example, for a network like Ethereum or Bitcoin, that design is sort of a mathematical proof, and the difficulty that comes with it. And the same applies with then on the smart contract layer, where you can engineer these smart contracts in a way and design that you really limit sort of certain types of risks. And it is a new world in the sense that typically, like a lot of the financial regulation is there to protect a lot of the situations of when users are giving their funds to someone, right? So, but in a non-custodial world, that perception is an approach is different when you have the custody of your funds, and also transparency. When you think about decentralized finance, you have that end-to-end transparency that comes from the blockchain and traceability, up to the point that you could create actually better financial decisions because you have the full visibility that isn't reflected on a quarterly basis, but actually on every second for anyone that is auditing the system. So I think this is a key point, in my opinion, to understand, because once you understand like what this new substrate provides as a protection mechanisms and designing well, you can mitigate a lot of these risks that traditional letter of law used to protect, for example, and doing it more efficiently.
Okay, I agree with you. You can program a lot, but there is a Nobel Prize in 2015 by Mr. Hall for contracting completeness. And that more or less says you cannot build the complete contract. So you cannot be perfect. So we have to be aware of that when building technology and building stuff. And that's where regulation or law comes in, I would almost say. It's where we need it. But indeed, I would love to see smart contracts more accountable with respect to the regulation that's there. So that would save us all a lot of work, because the owners themselves can see if they are trespassing.
Yeah. I think regulation is just a tool, right? So, and I think that you kind of you can use on the regulation side what works where smart contracts doesn't help or underlying blockchain doesn't help, and that comes into play. But a lot of the things I see in traditional finance, just like purely like the economical or technical perspective, can be solved with smart contracts. And I don't try to be a naive or in this approach, but I think it's just a different type of a paradigm on how to approach of mitigating issues, for example, when you give custody of your funds to someone. But at the same time, like for example, on a non-custodial access, mitigates that risk, but it introduces another type of a risk of how do you secure your assets, and if you provide a service for wallets, how do you educate users at the same time?
So talking about the decentralized world and traditional financial world, now there's a lot of interest coming from institutions also to understand the technology, to understand the application layer, to understand how the interaction would work. So I have a question for all the panelists as well. Like, how do you see this relationship being built between the blockchain decentralized ecosystem and traditional financial ecosystem institutions? I know that Georg and Stani, you work a lot on this from a more practical point of view, and of course the regulators more from a regulatory point of view and seeing those different interactions. I don't know who wants to start. Maybe Georg.
I think it's a very difficult question to answer because the crypto scene is already quite diverse. We have, customer-facing very simple things like the bank's customers also want to be able to invest into crypto. That's one way. Then we have payment or implementing stablecoin-based or proprietary payments, central bank digital currencies. Then we have the whole topic of tokenized shares and other assets. And I would say you see a lot of interest in general about everything. We've also been in talks with many banks. But to be honest, to this date, maybe we've seen a couple of good implementations where banks also offer crypto to their clients, meaning implementing either their own model or some white label model. But so far, I still haven't seen an implemented good case practice that actually has been proven in the market. But I'm confident that this will hopefully change in the next 2 or 3 years.
Okay, so you're optimistic.
Yeah, definitely. We have everything we need. It's maybe coming back to those two worlds of regulatory and technology. We just need to, figure out the last details.
Anyone else?
I think I'm also pretty optimistic about it because what I see in the Dutch market on experiments of banks with blockchain, that they are seeing operational efficiencies in the integrating in their current legacy systems. They also see that they can abandon legacy systems because of this shared platform. But this will take time, yes, because they have to divest certain investments that they did in the past. And that's not a simple decision, because then if you invest in what are you going to invest, what choices do you make? And that's quite a lot of money involved. And banks, well, they're doing well, but not all of them do pretty well. So that's for a crypto market where the investors are queuing up to invest money. That's fun, that's nice. But if a bank says, well, we're going to abandon or divest our current infrastructure and we need 200 or 300 million euros to create a new infrastructure, that's a hard sell.
Is the sell going to happen?
I would also say that, at least from our point of view, is that institutions are actually less interested in crypto assets and more interested in, these tokenized assets. And I think that's a very exciting, because we kind of proved along that, DeFi works really well with these native crypto assets that were kind of the first wave, and tokenization can actually bring a lot of value for institutions. And I think down the line, it actually pinpoints into reducing the operational costs. And obviously that's very difficult to do, because finance itself, it's so overly optimized space over decades and decades and so forth. But I think as we start to tokenize more products and have more utility from DeFi, the size of tokenized assets, and DeFi will at some point overgrow the kind of more native crypto assets like Bitcoin and Ethereum and so forth. I think that's where a lot of the institutional excitement is from our experience.
Maybe let's mention some of the challenges as well. We talked about potential of, like you mentioned, tokenization. I know that there's, discussions around privacy when it comes to decentralized infrastructure. There's discussion around interoperability, maybe a few others linked to cybersecurity. How do you see that, and how to best prevent? What are the solutions? Are we looking into regulation at the moment? Is standardization a better way? Should we develop more tools or infrastructural projects to solve these challenges?
Well, first of all, you need standardization. That's also for the bigger companies to step in and have interoperability. Standardization is key. Yes, privacy is key as well. I don't think, I know quite some high-frequency traders, they don't want to share their IP on their trading strategy. And on a blockchain, that's pretty transparent. So there, not even privacy, it's more like secrecy. So there we have to create an infrastructure that can balance public, private, permissionless, and that's a challenge. But I think that's the way forward for me.
Now, as Commissioner Albuquerque said this morning, the way we see it is that distributed ledger technology and tokenization are becoming the operating system for financial markets. But we have, in traditional computing, we have different operating systems. Now, luckily, we do not have as many operating systems as we currently have level 1s and level 2s, but layer 1s and layer 2s, but there's going to be a number of them. We have no preference for any of them. That really is the market and the development, market development that should determine which ones will prevail, and regulators should stay out of this, should not pick winners. Sometimes my day looks like that I'm in the jury of a beauty contest, because all of these layer 1s come and sort of say, please tell us that we're the prettiest. And I say, look, I'm a bad judge of this, don't ask me, you're all fine. I wish you a lot of success. Build something useful, and if you build something useful, build a useful application that will lead to more success for your layer 1. Demonstrate that you're useful. It's not whether you have most features, it's whether you're meeting a need in the market, or you can create a need in the market that's going to give you success. What we currently have is a number of different protocols that are all very efficient internally, so what we call sort of efficient islands, but they're separate. They're often not very interoperable. We're building interoperability, or industry is building interoperability, bridges, and these bridges are clunky at best. And that's where security risks lie. They often sit at these connection points. But what can we do? Maybe we should wait until some of these islands become bigger and push out the others. Maybe these bridges should become a bit more solid and a bit more performant. But that really is for the ecosystem to work out and to develop. And we only see progress in those areas when crypto markets are down. When crypto markets are up, most of the developers spend too much time, all of their time, speculating on their assets and talking Bitcoin up to whatever level, and they lose their focus on building useful applications. I have nothing against crypto trading. If people want to gamble or trade their life away, knock yourself out. But how useful is that really to society? If you look at the uses and the useful applications that you can build on a blockchain that really serve organizational or operational challenges and needs for financial market infrastructures, for logistics, or for any other sector in the economy, or to build a Web3 environment based on decentralized technology. So last year and the year before, everyone was going on about Web3 and this is going to be the future. Now no one is talking about Web3 anymore. They're all talking about boring stablecoins. I think the conversation has to go back to Web3 and all the excitement and all the opportunities that are on offer on there. I've got nothing against stablecoins. Stablecoins are necessary. But really, if stablecoins are all blockchains have to offer, why are we bothering?
I think we have much more to offer as an industry, but stablecoins, of course, are a very interesting utility as well. So in the past, as you mentioned, the European Commission is working on this topic for the last 5 years. We have regulated crypto assets through MiCA, not the technology, not the underlying technology. We have partially regulated the technology or some requirements when it comes to DORA, but now we're talking about tokenization. And of course, everyone here in the room is very much looking forward to see the part of the Savings and Investments Union, specifically on the DLT pilot regime, being published in 2 days. There's not that much, I would say, regulation or touching upon infrastructure there as well, but it is a very important thing for everyone that wants to tokenize assets that we have regulated before through MiFID, MiFIR, and now the new thing that we're introducing there is really the infrastructure. So again, maybe Peter, if you want to comment a little bit on that. I know you have talked and mentioned that, and it's going to be one of the most important topics really here, but from a lens of an infrastructure point of view.
Well, the DLT pilot regime does not regulate the infrastructure at all. What it does is it recognizes that our existing financial markets infrastructure regulation, be it the central securities, depositories regulation, finality rules, MiFID, what have you, that those were developed based on the traditional technology stack. And therefore, they are not neutral and not agnostic as to the technology used. And while we struggle to identify precisely where these legislations prevent the use of distributed ledger technology in tokenized financial instrument markets, there are barriers. And what the DLT pilot regime says is that, look, MiFID, CSDR is not technology neutral. It assumes the use of traditional technology. We do not yet know what the rules should be or will be in the future once everything will be tokenized, and I think that is the future. In the meanwhile, let's let people develop DLT-based solutions in financial markets, and we're going to give them a number of exemptions from the traditional requirements where we can demonstrate that if you do not have an exemption from the rules, you can't actually implement a DLT-based solution. So we're not regulating DLT, we are enabling DLT use. That really is the DLT pilot regime in a nutshell.
Okay. Can I ask a question? I had the impression that in the DLT pilot regime, a company is allowed to hold and the MTF license and the CSD license. And then, yes, they need to experiment with DLT because DLT allows you to do both at the same time. And to me, indeed, in the old regulation, CSDR and MTF, those are two different entities, and you're not allowed to be one at the same time. And that's what the DLT pilot regime is recognizing, that this shared infrastructure is allowing you to be one at the same time. Yeah. So that means that under the DLT pilot regime, you need to experiment with the DLT, and that's every now and then a challenge. But tokenization is something we already do since Black Monday in 1987, I would say, when the dematerialization kicked in 1994.
Now that's true, tokenization, but of course when we talk about tokenization, that's really code language for blockchain-enabled financial instruments. Although it's a bit of a misnomer because these things aren't tokens. Just like Bitcoin isn't a token, Bitcoin is just an account entry on a blockchain. That's what Bitcoin, it's a value at an address, so it's not a token. But everyone calls it token, so that's why we call it tokenization. But it has nothing to do with tokens. But you have to call the thing something.
Also, when it comes to tokenization, I think There's been a lot of discussions about the regulatory part, like the DLT regime, which I think is going into the right direction. However, I think very often we still forget about, I call it the last mile, the last legal step that, you know, in theory, I think we would have the technology and also the regulatory framework to, let's say, tokenize real estate. But speaking of the example of Austria, the land register doesn't allow my blockchain, any blockchain, to write to it. I'm saying this now very simplified, from a technology perspective, not an issue at all. Unfortunately, there's a law which doesn't mention that you can also write directly into the land register. You need a notarial deed. Similar with tokenized stocks. At least in Austria, it's very clearly defined how you can issue stocks or shares in a company, and you can't natively tokenize those. There's no physical reason why this wouldn't work, but again, this last mile, we need to go actually into the Austrian law of stock corporations, and we have to do this in each and every country because it's not harmonized. And I think only then we will finally be able to upgrade the TradFi world into a new financial world.
The last question for Stani. Stani, you were a visionary for a really long time, started very early in the crypto scene. What do you see in the future? How is the future looking when it comes to tokenization related to Aave? Maybe stablecoins as well, connected to, I don't know, the future of Aave and institutional side as well.
Yeah, I mean, I think definitely like the future of finance is around upgrading the existing rails in traditional finance into this kind of more transparent, open rails that the on-chain provides. And I think there's three components there, and one is DeFi, and why? Because you basically have these protocols or public goods operating in a way that they provide the best possible execution because of the open, competitive nature and public open source nature of the ecosystem. And then I think obviously stablecoins, one form of tokenization is going to keep growing, but then tokenization of assets is, I think, going to be a really growing theme. And especially because it's a way to actually then scale these DeFi use cases, because there's a very limited value on using these native assets like Bitcoin and Ethereum and creating interest rate markets and so forth. But actually what's going to happen is we can start using the very well-proved protocols that work really well and applying that to these more traditional assets that are on-chain. And I think that's the kind of exciting part, and the progression is going to be really slow. So I think getting DeFi more used or the blockchains more used in traditional finance is going to take a couple of decades, and the transformation will take pretty much forever. And we know that because the existing financial infrastructure has a lot of legacy systems that are still in operation. But second is that end of the day, it is the financial infrastructure, and finance is fragile, and you need to retain the trust. And that's also very important for decentralized finance, because innovators that are in the space are constantly trying to build upon this trust and building these applications and protocols that could benefit everyone. But end of the day, the kind of like big picture here is that if everyone can get access to the same financial opportunity with the equal transparency, I think we have something more better than exists today.
Thank you to the panelists. We're at the end of our panel. Everyone, don't worry about your job or this type of discussions. It's going to take decades, but we are optimistic at the end of the day. So hope to see you next year as well. And thank you very much for your attention.
Thank you. Thank you so much. Thank you so much, Marina, for the great moderation of our conversation. Thank you, Peter. Thank you, Leonard. Thank you, Stani. Thank you, Georg, for the great panel. And we continue, so do not leave, because we go straight to our next panel, which is still on decentralized finance, on DeFi, on decentralization, actually, more accurately. And I am very happy to call on stage Arno Leven from the European Decentralization Institute, with which we as Blockchain for Europe have just announced recently a new partnership. So we're very happy to be working together with them. And Arno is going to guide us in a conversation around DeFi Quo Vadis in Europe. This is Robert's title, so you can complain with him or give him good feedback if you like the titles. In any case, Arno is here with Jan Reinhardt from Ludo and Samuel Azzopardi from OKX. So a big round of applause for our next panel. Thank you. We are, Jan, yes, perfect. And just to let you know, there is one final coffee break after this panel, and then no quiz, though, quiz tomorrow, and then the last two panels and the networking drinks. Stay with us until the end. Thank you.
Yeah, now it's working. Thank you very much. Thank you for sticking around for this panel. Actually, I was thinking, because of the last panel where it was said there's so much more interesting stuff to discuss than only finance, I would say this is about DeFi, but maybe we should talk about the D mainly, about decentralization. And of course, I'm biased because I am the founder and executive director of the European Decentralization Institute. We advocate for decentralization as a strategic foundation of Europe's digital society and economy. And we published our first policy paper just 2 weeks ago on digital sovereignty. And then from that, I was so lucky to be invited to a summit in Berlin on digital sovereignty, which actually showed how important that topic is. So if we are looking for decentralization and how it fits into policymaking, then digital sovereignty definitely is one that Europe is interested in, with even Chancellor Merz and President Macron being on the stage, rooting for decentralization. Having said that, we have a very interesting panel to talk about this, to talk about DeFi, to talk about anything that is related to that, and what can we learn from other countries in that respect as well. And maybe my first question is a little bit of an open door, but I would like to ask it, and also like to ask you to introduce yourselves while answering that question, or maybe first introduce yourself and then answer that question. But the first question is, when we look at DeFi or look at decentralization, is Europe actually missing the boat? Jan.
Reinhard, thank you very much for having me on this panel. I'm an investor, and one of my portfolio companies, Ludo, I present here on the panel. And back to your question, is Europe missing the boat? I think we had a few discussions just before on that topic. We see that other people have been early. We heard about Liechtenstein. Switzerland had early DeFi regulation. The US now with the Genius Act. I think it's also a strategic discussion that Europe should have. It comes relatively early, first with regulation and then with economic growth. Most other areas have the economic growth first and then they regulate. And I think particularly because you talk about the decentralized part, I think it's interesting to see also the Genius Act in the US, where you have, much like the banking regulation in the EU, where the ECB regulates only the large banks and national regulators regulate the smaller banks. The Genius Act in the US does the same thing. It's only the very big ones are regulated by the federal agencies, and only the smaller ones are regulated by state agencies. And I think missing the boat is also an interesting question about, we heard a lot about standardization. We've seen the Czech National Bank trying to first iron out all the differences and then opening the market. I think Europe has such a diverse the landscape of countries and traditions, and I think why not play out the market and see which interpretation of the countries actually works best. And from those you could pick a winner. If one country really stands out and a lot of economic boom happens in one jurisdiction, maybe the others can learn from that. I think the richness of Europe is the diversity and not the standardization. And I think that is the issue. If Europe really tries to hammer home any standard, it will take forever until we've heard about civil code problems, financial regulation harmonization, tax harmonization, and whatever else. Why don't we let, with a minimal light touch regulation on the processes? I mean, if you're an asset manager, you need to have follow certain rules. If you're an exchange, you should follow certain rules. But most others, I think they should first let the market play out and then see where there is abuse or where there is a problem. And I think that is the general approach, where you try to promote growth and not regulation first. And I think is the hard part of the European discussion.
All right, thank you. Samuel?
So I believe, let's talk of what we have at the moment. So although there are a lot of bills in the US, there is no multi-comprehensive framework as of yet, like we have in MiCA in the EU. So even though the Genius Act, as mentioned, it has a DeFi carve-out, but mostly in relation to stablecoin providers. I believe that recital 22 of MiCA, which mentions DeFi, I would say it's a very good compromise about the actual situation on the ground. So normally what we see in recitals is, or what is going to be further explained in the text, in the articles, or rather something that no one could agree about, but you put it there, like other things like the interlap between PSD2 and MiCA. But I believe in recital 22 we have a signal where if a DeFi player is truly advocating decentralized protocols and also autonomous, then it is exempt. And I believe that is a good starter. We don't need to regulate everything.
All right, we don't need a regulator. I don't know if there are any regulators still in the room, but having said that, I think that earlier today, Peter Kerstens said that when he travels the world, and I think it was Peter saying that actually, when he travels the world, he sees that Europe has all the regulation but no innovation, and the rest of the world has the innovation and no regulation. So actually, that is back to your point, maybe, both of you, where you say, well, if we look at the way that we regulate within the EU, then there seems to be a tendency to become more centralized in terms of the regulation rather than decentralized. And that might be different in other countries, like in Switzerland, for example, or like in the US. What is your comment on that?
That's interesting, because that's exactly where the company Ludo comes in, where we have a fully decentralized compliance tool where there's no central authority telling you what is a good crypto project and which is a bad one. It's the decentralized users and use cases that will actually determine the trust layer that we're building on top of the infrastructure to screen all those incoming projects for the exchanges. So I think that is somewhat answering your question. The variety of local adaptations, I think, would be a much easier and faster route to success rather than trying to standardize every little detail at first. And as we heard, the complexity between tax, regulation, civil law, all that comes into play, and until you find a standardization, it will be much easier and faster to have decentralized organizations and regions trying out their version, and then the market will decide which one is the most successful.
Yeah, also the challenge with EU regulation is how long it takes. So at OKX, if you look at the DeFi trends from NFTs to meme coins, mania, or if you look at the critical technology shifts from proof of stake to proof of work to zero knowledge to optimistic outputs, proofs, they are normally measured in months, not in years. Maximum of 2 to 3 years. If you look at Mika, it took 3 to 4 years, and then grandfathering provisions. So how do you really do a pan-European regulation on such a decentralized topic?
Yeah, exactly. And maybe for speed's sake, some form of centralization would actually help then in maybe the decision making. But I can imagine, Jan, that you are not completely in agreement to that. Because how would you see that if different member states in EU would actually all have their own regimes and let the best win? What would that look like?
You have now, as an example, you have MiCA. But now the question is, how is it implemented? We had a discussion about the interactions with the civil code and the tax code. So I think the more generic and the activity-oriented the regulation is, the more different the implementation in the countries can be. The more you try to standardize on how the companies should behave and what they need to do, the more difficult it is to first implement it into local law and then also to standardize it, because it has so many layers of complexity that comes into the regulation. So I think activity-based regulation and relatively light touch is certainly the faster one. For the systemic relevant players, just like the banks with the ECB, there of course centralization makes sense. I think it's the largest 30 banks, I'm not sure what the number exactly is these days, are regulated by the ECB because they are relevant not just for their own countries but for the whole of Europe. For every crypto player who becomes that big that it's relevant for every economy around the continent, of course it should be centralized regulation. But until we're there, there's ample time to grow for the industry.
And is there a difference, as a follow-up, and then I'll get to you, sorry, is there a difference between how Switzerland is working on this compared to the EU, and what can we learn? Switzerland has a history of being very decentralized. When we created the country in 1291, there was no central currency. So currency has never been a political power as other countries have had it, like the French franc, which was always something that the central government would wield as a force. But in Switzerland, you can pay your taxes in bitcoins and file your annual accounts in English. And certain cantons allow that, and others don't, and that's fine. And we learn from one another, and other cantons can adopt or don't have to. It tends to be those cantons who have more financial or industrial backgrounds that are more innovative or more interested, and more rural countries who have maybe less of an interest, but not always, but in many cases. So that's fine. Then you have 2, 3, 4 versions of a market, and you see which one plays out. And in the end, the market will go there where the conditions are best. Samuel, what is your take on this?
So, I'm a convinced European, and I tend to believe that proportionality and subsidiarity are still European values. So I believe what he just said, and I believe that in a case where we have DeFi, creating regulatory sandboxes at national level, there has to be trust between regulators. So if you have a player who've acted well in line with European values, in line with principles which we consider as essential to survive in the financial system, the European financial system, for a given number of years, then that player can also access other markets in Europe, so can access on a pan-European basis. And this is in particular for DeFi, because MiCA comes when you have CeFi, which has achieved a certain level. DeFi is still quite small and large at the same time. So I believe that we should have an open dialogue where all national regulators invite DeFi players and really have this dialogue, not impose regulation by certain regulators that may not necessarily also understand all the implications.
Okay, thank you. By the way, if there are any, we're still with a small group, so if there are any questions from the audience, just raise your hand and you will be given the floor. So let's not wait until the end of the panel. If you have a burning question, then please raise your hand. I don't see any. I would like to switch to digital sovereignty. I mean, I alluded a little bit to it in the beginning. And Europe talks a lot about it these days. But practically, really, what would it take to build a DeFi ecosystem on European public rails rather than foreign infrastructure? Because that is, what a lot of the regulators and policymakers are looking for. Eurostack or what have you. Can we please build it on European technology? How do you see that? What would be your take? Maybe Samuel first.
Yeah, so I think there are 2 points to this. First, the liquidity cap. If we look at stable coins, they're mainly denominated in the dollar. So I think that EU it provides the framework under MiCA, but now needs to incentivize financial institutions to issue their stable coins back to euro, denominated in euro, so that we can have DeFi protocols and involving euro pairs. So that is, I think, the first point, if we have to look at digital sovereignty in the EU. And secondly, yes, the combination of the public infrastructure, so if we look at APSI, the European Blockchain Services Infrastructure, it would be a great idea to use the APSI decentralized identifiers coupled with the EU digital identity. And that could be great if they leverage those together. That would be something very concrete, which we can achieve in Europe.
All right, thank you. Jan, how do you see this?
We have a regulator who tries to regulate and interfere in the technology layer. And then we complained about sovereignty and technology that needs to be sovereign. I think that's a bit of a contradiction in terms, if you ask me, because I think ideally you would have a clear market and hope that there are some European players, but Belgian Air Force flies in air that circles around the globe, so I don't think you can limit the Belgian Air Force to just Belgian air. That's just not working. You'll have the same in Switzerland when you have a technology neutral regulation and the financial regulator called FISMA goes chain by chain and liberates them. I think we're 12 chains now that are regulated by now. So of course they're not all Swiss. But these chains, you have to think of that, it's like a closed island in a way. They have their own rules and workings. And I don't think it's a good idea to regulate technology just like the European Payments Initiative is not really taking off anywhere. They would like to replace or have an alternative to Visa and MasterCard, but somehow it got stuck halfway, and I'm afraid that the blockchain sovereignty discussion will be just about the same, because we focus too much on the regulation first rather than creating the context where a European player could become globally relevant.
All right, thank you. This panel is called Europe Quo Vadis, so let's have a little bit of an outlook. Where are we actually going? So to both of you, let's say 5 years from now, do you expect DeFi to be really absorbed into existing financial systems, or will it become a parallel reality, I wanted to say, a parallel financial infrastructure? And what role will Europe realistically play in that future? Samuel?
So it really depends on what the Commission is looking at, what the European Parliament will look at, and finally, the deciding factor, the European Council. So I believe it should be the way forward, but touching on what earlier was said, if we stifle technology in over-regulating technology, I think it's not a parallel or an integrated system, but we are going to leave, let's say, a whole industry out. So I believe we have to seriously think that when we discuss, when we opine, it's not only a statement of wishes, but it's actually an action plan.
Okay. Jan, how do you see this 5 years from now?
I have witnessed now the fintech industry evolving from its early days in the 2010 years until now. And what has happened in different waves, let's take another example, Revolut. Revolut started really at the fringes, and I think today it's the biggest bank in Europe. And the same dynamic you will see with other elements that we've been discussing today on the stage. Which one is the first breakthrough? I'm not sure. Stablecoins maybe, exchanges second, but the trend towards more digitalization, towards more integration, towards more automation is coming. It's clear that the regulator tries to protect the existing financial service industry versus the newcomers. The newcomers tend to be not European players, either Asian or Americans. There are some locals, of course. So I think it's basically a geopolitical question. If Europe wants to play, it needs to really get serious about fostering an economy where growth can happen. And the more growth-oriented an economy is, the more integrated in 5 years DeFi will be in the financial sector. I mean, I can imagine a financial sector totally segregated from DeFi, and I can imagine a fully integrated version. And I think regulation should, in a wise way, ooze the DeFi into the established players, also force the established players to adopt some of the new technology eventually, just because the market will dictate that they're much more efficient, they're much more convenient to the consumer or to the users. So I think the openness to the economy and to growth, so maybe we should have economists next time on stage talking about this rather than lawyers and tech specialists and regulators. I think economists will tell you what model will survive. My observation of the last 15 years of fintech is that technology always wins if it's better than the past. And we've heard about romantic views of technologies of the past, that they will not win. So if that is true, then I think we'll see a lot more DeFi in the financial service industry 5 years from now.
Jan, if this is also a geopolitical play and Europe is stuck between America and Asia, then should we actually be doing the same? Or you as an entrepreneur, what should be Europe's own, let's say, unique angle to this world in creating something that is really innovative and find its way, and also being able to export that to the rest of the world?
You know, first of all, you have to make it work, and you have to add value. It's always in an innovator's dilemma. Either you innovate early and you can shape the future of what you're trying to innovate in, or somebody else will dictate you the terms of the game in the future. And if Europe wants to continue to have a word and a say, it should be much more on the lookout for new trends and foster them rather than trying to hinder them. Just like we've seen with the AI Act. We could have the same discussion about AI that we had about crypto today. And almost all the votes would be very similar. Because Europe is not pushing the AI industry, it's trying to regulate it. So I think it's always that tendency of first regulate early that puts Europe in the binge, and with good intentions in many cases, because there are always risks. With any innovation there's risk, we have to accept that. But as an entrepreneur, you look at risk and you look at the risk and see, how can I manage it? It's not, ooh, risk, I'm shying away. Risk for an entrepreneur is opportunity. And I think that is something that needs to be rewarded in Europe and not punished.
Very clear message.
Yeah, I totally agree with Jan here. And maybe we should make a reference also to the Clarity Act. The Clarity Act, I believe Europe should look at it and in many ways try to emulate it as well. There's nothing wrong in trying to emulate a successful piece of legislation, which is not yet in force, but the aim is not, I believe, to stifle technology. We can regulate interaction, access, by which players, common rules, standard framework, but not stifle technology. And this is, I believe, paramount, of paramount importance if the EU wants to succeed and bank on being also the first large jurisdiction, if I have to say, the 27 plus 3 in the EEA, to have the MiCA. So if EU wants to stay at the forefront, you cannot stop.
All right. Looking at the audience, are there any questions from your side? Yes. I don't know, are there microphones, anyone, or did... All right.
More than a question, it's a bit of an observation. Earlier we were saying, like about regulating DeFi, etc., and MiCA. In terms of DeFi, I wonder, we keep hearing about outcomes-based regulation. And in my home jurisdiction, the MFSA actually states that it's objective across the board. I think DeFi is the prime candidate. It is a situation where you don't really need to stifle the technology or growth or new initiatives, but you can have some outcomes that you would like to promote. And a good example can be found in another piece of EU legislation, which is GDPR. Like we gave people rights. We know how the outcome looks, but we didn't go and tell every single company out there, this is the way you have to achieve it. MiCA is uber prescriptive. I think, with the passage of time, MiCA itself will need to morph into something that is a bit more outcomes-based. However, DeFi still exists out there. It's experiencing a lot of uncertainty, and I think if, like the EU bodies got together and said, our approach to DeFi is going to be outcomes-based, more investment would go that way, and I think we would actually start tipping the balance back towards Europe. Because right now, innovation in DeFi is not happening in Europe, it's happening in America, and it's happening in the Middle East, and of course Asia. That was my comment.
Thank you. So that was more a comment than a question, but I think a very good comment to end this panel with, because we're out of time. I think we go for coffee now, and we'll be back after the break, but not before we thank our panelists. Thank you very much, Jan. Thank you very much, Samuel.
Thank you so much, and thank you, Jan, thank you, Samuel, thank you, Arno, for the great conversation around DeFi. And now it's time for a coffee break. So everybody go and enjoy your 15 minutes of coffee break, and then we will be back for the last two panels of our first day of our 7th Blockchain for Europe Annual Summit. And this will be a conversations offered by Nota Bene on stablecoins at scale. Is a travel rule friend or foe? We haven't really talked about the travel rule yet. That's another important piece of the whole regulatory environment capturing the crypto asset sector in Europe and generally in the world. And so we're going to hear from Nota Bene CEO Pelle Brandgaard together with Peter Kerstens again and Oliver Stauber on this conversation, so in 15 minutes after the coffee break. And then finally, one last conversation today to close our first day will be on stablecoins and their potential role as global reserves, with speakers from KBC, from Ripple, Paxos, Nota Bene, and moderated by OnFIF. So thanks again, everyone, for being with us until now. Now, one final coffee break, 2 last panels, and then don't forget we have networking drinks offered here in the venue by Blockchain for Europe. Then I think we all say, we all split up for dinners. Everybody's going to have dinner somewhere. I hope you will get some dinner tonight. But then we all meet again at 9 p.m. at Delirium Cafe for our final side event called Belgium Beer Meets Blockchain. So hope to see you all tonight as well for some drinks, and otherwise enjoy the coffee break, and thanks again for being with us. See you in 15 minutes.